All right. So for those joining here, it's nice to see you all here on our yet another Palo Alto call. My name is Ivan, and here Malika is helping me out to host today's meeting. So yeah, we have two projects here that are gonna be representing their pitch decks. But first we have Delroy Brown, representing the Invo, and Osnat, CEO at awesomeye.com. So I don't know, Osnat is going to be first representing the project.
So first of all, thank you for being here. I'm a little bit of an odd, I think, project in the space, since although we are blockchain based and NFT based, to the outside world, we are a fintech payments company, and our focus is on an industry that aren't seeing a lot of startups, surprisingly, which is the gift card space. So just to give you some idea about the space, gift cards is $1 trillion industry, so $1 trillion. And outside of US, it's about 800 billion. US is it's 200 billion. And it's growing pretty fast, although it's an established industry. And we all have gift cards lying around the house. I mean, a lot of us don't know where they are. And we lose track. And this industry is fairly broken. It hasn't had much innovation for a long time. And you would have thought it would, considering how big the market is, but it's fairly stagnant in terms of technology innovation. And it really caught my interest because of the difference blockchain can make here. But considering how traditional this industry is, the trick was, how do we create something that can help this industry without them having to directly deal with blockchain themselves, neither the merchant or the seller of the gift cards or the consumer who buys those gift cards. Now, why does this industry need anything from us or any other innovation company? There is a big paradox in this business. So although companies issue gift cards to the tune of 200 billion in the US, the way it works is that the company needs to wait for those people who bought the gift card to redeem it in order to actually get the money that they were paid. So you can sell a gift card as a business, and then you sit and wait. It can be a day, a year, 5 years, or it can be never. And the interesting bit is, if you're an American, you'll find this really intriguing. If you never use your gift card and it expires, the US government takes the money. Now, it doesn't take $1 or 100 million. Last year, it took $23 billion. So imagine how much of it is our money, because we didn't actually get to use the gift card. And a lot of it is the merchant money, because they thought it will come in. So you can see how there is quite an opportunity to improve some of the processes here, and definitely blockchain can be a huge helper with the process. So what's our role? What do we want to do within the space? And why would it matter? So let me give you an example of what it looks like for the merchant. So we all heard about the work that Starbucks does with loyalty, but they're not tackling their biggest problem. Their biggest problem is gift cards. So they sold 3.3 billion, but only received 1.3 billion in the same year. And that's how it looks for them every year. Why does it happen? Because as long as the gift cards are not spent, they cannot touch the money. It's a liability. If you look at the same year, 2022, they had about $164 million worth of gift cards that expired that year, which they had to give to the government. That's a percent of their entire global revenue. So this is a real big pain point. It matters in the pocket. It's big money. So far, so good. Seems interesting, right? So what can we actually do there? So we help businesses boost their financial liquidity and revenues from gift card sales. How do we do this? So we tether gift cards to the blockchain. And when companies issue gift cards, those gift cards register on the blockchain, but we don't change a lot of the paradigms within the business. The coupon codes you guys are used to having will still be there. The redemption on the website will still be there. And you also get a non-custodial wallet, similarly to the gentleman who spoke just before me. So you go online, you buy the gift card from whichever merchant you want to buy it from, and then you just go and you redeem it with that merchant. But instead of getting a PDF in your email with the code, you get a link to a wallet, which is a non-custodial wallet. And that wallet allows you to access your gift card online. And that gift card is tethered to an NFT. So it's a patented process we've submitted patents for, and we call it value-linked smart contract. So although the value is tethered to the contract, it's not physically written in it. So we keep the gift card code separately on a centralized system, but the NFT or the gift card allows you to have full control of ownership and custody over the gift card. So another big issue you might have heard of, fraud, money laundering, those are very prevalent in the gift card industry, and this will definitely reduce those risks for the businesses. What benefits do you get by switching to a blockchain-based gift card? You get a much higher revenue recognition. If you remember in the beginning, we mentioned that when you actually sell the card, that does not mean you get revenue. To get revenue, you need the card to be redeemed. By using our particular method, you can get revenue recognition at the time of sale. And even if you choose not to, suddenly your gift cards are resellable because they're a blockchain gift card. So you can get your consumers to sell gift cards they don't want to use and still increase redemption, hence increase your revenue. New customers. Right now, if you buy a gift card and give it to your sister or your brother, the company who you bought the gift card from knows nothing about those people. If you switch to a blockchain-based solution, you can have a relationship as a business with your new consumers, the ones who got the gift card, not the ones who bought it. And then, of course, you reduce loss of money for both sides on expiration, because you can remind the consumers that their gift card can be redeemed in only one more month until it's expired, or 2 months or whatever, and make sure that it's maximized in terms of value for the consumer. Digital wallets, which is an emerging regulatory requirement, not just convenience, especially in the States. And of course, what we've done is we merged the Web 2 world with the Web 3 world. So neither the consumer nor the merchant need to touch blockchain or understand blockchain to use blockchain, which is one of the best ways technologies can work when they don't require people to make massive changes to their business models. So why us? So we kind of looked at all the players in this ecosystem, and the biggest ones are obviously the companies, the consumers, and the regulator. And we created a solution that benefits all of them. And this allows for different parties within the buyer as well to be on board. So often you would come into a business and that business will be really excited to work with you, but then the regulatory people in the business, the compliance, the risk officers will come in and say it's too risky. With us, we actually reduce risk problems within the business. So they're the first ones to say yay. We have very good initial traction. We have initial customers and gift card sales. If you happen to be going to NFT NYC in a month and you might be speaking there, you might have noticed there's a partnership with us. We're the partner for hotel choices for the conference. And one of our customers, which is a Nomo Soho hotel in Soho, in New York, is selling blockchain-based gift cards with us to the speakers and attendees, and had a nice traction with it. So people bought the gift card and then they redeemed it on the hotel website exactly like it's meant to work. And we've, of course, applied for unique patents on what we're doing, which is quite important because we operate in a regular space and not just in pure blockchain space. And if you look kind of where we fit within this industry, we're not really a marketplace. We're not really a loyalty program. I think the biggest player we really take money from is companies that behave as custodians. So companies that hold the money for the merchants while those merchants wait for the gift cards to be redeemed. Those companies, and here are some examples, make anywhere between $5 and $45 billion a year internationally. And if you use our solution, in most cases, you suddenly don't need the custodian. So that money goes back into the margin between us, the merchant, and the consumer, which also allows us to make nice money when we facilitate sales. And the way our model works is we either work with brands or we work with aggregators who can resell us to the brands. We charge a fee from the seller, and which in the beginning, and then we charge a percentage of the gift card sales, which generates passive income for us, obviously maintaining the system. But other than that, once you do the switch, you keep printing gift cards, and it's an ongoing business for the merchant, for the brand who sells the gift cards. Where we are right now, We raised a pre-seed of 1.25 million euro about a year and a half ago. We've used it to build a platform, secure the patent applications, and a few partnerships. We started doing pilots, and we are now focusing on expanding our relationships and consumer base. And our main business focus is on US and UK. We are now raising our seed round, and we already have a lead investor signed. And we are raising fairly modest amount because we already have revenue from sales. And our goal is to scale up our relationships with 2-3 big customers and another 5-6 smaller customers over the next 12 months, and also build out and automate some of our product features like APIs and databases that maintain the codes. So this is a little bit about us, where we're heading. And I would love to hear some questions, and happy to answer whatever questions or interests you guys might have.
Thank you so much, Osnat, for your pitch. Okay, we have a hand. Go ahead. Thank you.
Okay, yes. So I'm here in the States, in the East Coast, and I definitely second a lot of what you're saying as far as the gift cards and things of that nature. Really specifically, the clients that you're looking to work with, where are they in scope and size right now?
So the customers we're targeting are two types of customers. We're either looking for brands. Brand can be as small as a single hotel or a small chain, or as large as the Macy's of the world or the Targets of the world or the Marriotts of the world, as long as it's a single brand gift card. So what I mean by that is that the gift card is branded to be allocated specifically to the business for which it sells. So when you buy a Macy's gift card, of course, it's meant to be used only in Macy's. The other kind of customers we're targeting is aggregators, so the likes of Shopify, Wix, also mine MasterCard, lastminute.com, and we're in conversations with quite a few of them already. And in terms of brands, our minimum, I would say, revenue for brands is at least $1 million potential gift card sales a year. Other than that, it's not worth the focus in terms of the effort for both sides. And also in terms of verticals, we're focused on retail and e-commerce, loyalty benefits, which is about 1/4 of all gift cards sold, and of course, loyalty and hospitality space. Does that answer your question?
Makes a lot of sense. Thank you so much, especially that benchmark. That was really the question I was trying to get into.
Yeah, absolutely. Happy to.
Okay, there is another hand. Love investment.
Yeah, Osnat, hope you're doing good. And again, amazing company. I just kind of wanted to ask, have you guys ever thought of implementing a utility token to back up the gift cards?
Yes, and we absolutely aren't going to do that, and I'll explain why. So the way we've built our platform is we've cleverly avoided being an asset creator. So the way we create our gift cards right now is that although they're tethered to value, the physical value, so the gift card codes or the monetary value, sits centrally outside of the gift card. So we have not created an asset, and we are of no interest to FCC and SEC. This is a massive inhibitor for other companies who venture to do this. If you do it this way, and obviously we've gone through all the legal routes and all the legal conversations to see that we're doing what we're supposed to do, puts us on a path where we have a bit of a way to go before we're of interest. So our patent is much wider than just prepaid gift cards. It covers the ability to also do prepaid credit cards. By that time, yes, we will absolutely end up being in the regulatory space. So if we issue the token, that puts us on the radar for second FCC when we don't have to be. So if we were there already, it would matter, but since we're not. And also the customers we're targeting are fairly traditional, and it pegs us into an area of business that they find harder to palate. And if I lose money because of it, because I could have easily raised with the token, but I stick to fiat religiously at this point, so that it's easier for us to grow faster with those kind of customers. It's purely because of who the customers are, and we need to make it as easy for them to buy.
Gotcha. Yeah, no, sounds good. Definitely, respect the opinion and everything. Do consider kind of research a little bit on the how we test as well. Because, just kind of what it sounds like, there's no promise of reward or anything like that. So it could actually benefit in certain points. especially in the transactions. But yeah, I do get
what do you mean no promise of reward in terms of investors, you mean?
No, not necessarily. It's just there's a big misconceptions right now with utility tokens and this and that it always needs to have staking or giving rewards to the investors.
No, I know
that.
exactly what you're saying.
But yeah, if the token really acts as a tool to give benefits and access, it passes what is called the Howey test, in which again that's an SEC regulation test, which classifies it as a non-security, right? And again, I'm just saying this. It's kind of our field, but it seems like you guys could benefit by it because you don't have to back it up with fiat. You can just back it up with tokens. And as soon as something is used, it comes out of the liquidity pool, right? So there's definitely something to do there, but I do respect the opinion and everything. So if you guys, think it's not,
I think you and I and everyone on this call get it. But for conservative industries, if it can stop a conversation, it's not worth it at this point for me. I think if I was bigger, and I had a very big customer roster and not in single digits, I would be in a position to reconsider as well, because by that time it would have been visible to others that, this exists and no one was bothered by it. So I think it's a matter of also the stage we're at as a business. And it matters if it takes us 3 months, 6 months, or 12 months to do a sales cycle to a big customer. So if that can slow me down, it's not necessarily worth the financial upside at this point for us.
Sounds good then.
It's a good question.
I'm going to actually comment on the same question, but suggest a different tokenomics for you that could solve your problem, by which you could follow the Uniswap model. So just issue worthless token right now. There's no LP, nothing. It's just a reward token. So it comes, it's issued, since you have the wallet, you can give that to the whoever buys the voucher. And then once you grow in size, then you would basically go back and say like, hey, we're going to do it for governance. And then you go and say like, hey, and now we have a vote that we will distribute X amount of our revenues to the token. By that time, you already have the customer base, you have the token propagated, all of that stuff. So it can immediately
So
explode.
You're closer to some of the ideas we had for sure. So we definitely see our platform also as a secondary market for gift cards in particular, because right now, if you want to resell a gift card, you can't really do it legally because you would have to go through another KYC, and no one would ever bother doing that to sell their $50 gift card. And also it requires a lot of trust. I mean, I've seen the code and I'm selling it to you. Even if there's an intermediary, what's to say I'm not just going to use the code as soon as you buy it? So in our model, suddenly it makes sense. And a lot of people have gift cards they're not going to use. In that case, yes, we might create an intermediate token to allow people to actually use gift cards to buy other gift cards, or to have like a single point of currency to allow an exchange and not just a sell-buy model. But again, as I've pointed out, I think we need a critical mass to do that, so we don't spread too thin in terms of our development resources as well. Thank you. Any other questions? Anything I can dive into in terms of the tech or the pipeline or anything at all?
I think in the chat there is a question about what kind of funds are you looking for and how much are you looking.
So the way we're positioned in the market, we're not exclusive to blockchain funds at all. So the existing funds that look at us are often generalists, and we are also looked at as a payments fintech company by many. So for example, next week we're a finalist at the biggest European payments conference, a startup finalist there. And so it's the payments and fintech industries, VCs, as well as blockchain, but not coin offering. Our current investors, they were strategic angel investors, and from the previous round. And this round, we have an investment business that also invests in us directly, but they invest as an LP in seed stage generalist startups. So I think anyone who VCs that are looking at payments industry, e-commerce, B2B2C. So our predominant source of income is business, but it does roll out to the consumer. And anyone who is looking specifically at SaaS as well are relevant as VCs. We also really love strategic angel investors. So one of the investors we have coming in right now was head of global payments for Amex for 10 years. Another one was a CEO of a big news publication. So those kind of investors, even if they come in a smaller check, are very valuable to us as a player who has skin in the game, and just also help us in terms of progressing the business. I think in terms of investment, we have about $800,000 to go to close the round. And we're probably going to close in the next month and a half, if things go as to plan. So if that answers the question. I actually think maybe it's worth mentioning we're an Israeli tech startup. I didn't really say anything about myself. So I'm a serial entrepreneur. And before that, I used to be a senior in big consultancy. So I was a strategy innovation partner with Ernst & Young for a couple of years. And before that, I was digital transformation strategist for Accenture for quite a few years. So I have a very extensive network in terms of big business. And I've personally sold over $100 million worth of innovation deals in my past life. My first startup was AI on blockchain, maybe a little bit ahead of its time for clinical trials. And then COVID, unfortunately, killed trials for a year and a half. So we had to shut down because all trials were just COVID trials. And then I started consulting other startups on strategy. And this is how also mine was born, out of one of the projects we've had. So this is kind of my background and my personal kind of network and space I'm coming from.
Yes, thank you so much, Osnat, for your pitch and for all the information. Okay, now we have your LinkedIn. So if there are no questions to Osnat, should we start with the second project, which is Invo? Delroy, are you here? I guess you had some technical problems. We were waiting for you, but everything is fine. So
yeah, thanks for joining in.
You here.
So let me go ahead and prepare my screen to share. Okay, awesome. Thank you for the opportunity to present before you guys. As you can tell, my company's named Invo Technologies. Our mission statement is to create a better digital economy, and you'll see exactly what that means as we go through the presentation. The problem that we're attacking is for the game industry. They have high player churn. When a game is normally released, it loses typically up to 85% of its player base within the first 7 days. And most of these games cost anywhere from, $10 million to $100 million for the AAA games. And they're high marketing costs for those games as well. And to recoup costs, they don't have much opportunity to actually do that because there's not much revenue streams available to that studio to actually recoup the cost of that loss that they have. Our solution for this that Invo has brought to the table is we're intending to tokenize the video game economy. And by doing so, we are able to boost the revenue of that particular game over its lifetime up to 70%. Now, while doing this, we end up actually increasing the player engagement for the players of that particular game. And studios tend to have millions, if not billions of dollars a game on the shelf already. So they can actually, with our tech, bring those games back into the marketplace and create more monetization opportunities for those games, right? And I'll get right into actually our process and actually how that actually happens. So what we do is a game developer, whether they're in Unity or Unreal or Godot, they're able to integrate our technology. And what that does is enable their players to move cash from game A to game B, right? This could be within their library of games, or it can actually be, external. It can be open to their competitors if they so choose. And it's a very simple process. Player moves cash from one game to the next. And as they do this, we charge a fee. And this fee that we charge is 10%. We give 3.5% to the developer that's losing the player. We give the other 3.5% to the developer that's gaining the player. And so if it's both of their games, they'll end up making 7% in total. We have 2% for ourselves, and we reserve 1% for Steam, PlayStation Network, or Origin, or the likes of those networks. And the reason why we do that is we want to enfranchise those platforms so they can actually we can incentivize them to have these Web3 games on, because whether these games are Web3 or Web2, our technology essentially just plugs in a Coinbase or Uniswap into the game, converting their game economy into actual real economy with real macro and microeconomic principles behind it. We have actually gone a significant way in our development, and we've actually have demo right now. So I'm just going to play a 60-second video for you so you can see our demo before I continue the presentation.
Hello, and welcome to Invo's first demo. We're going to be demonstrating moving gems from one game to the next. So let's go ahead and click on the Invo transfer option to start the transfer process. Now that we're in the settings panel, let's click on the Invo transfer tab to begin. Now I only want to move 130 gems to Angry Birds, so let's do that. Please note that there's a transfer pin as we're going to need that later. Cool. Now let's wait for our notification before we switch to Angry Birds. Ah, there it is. Okay, so as I go into the settings here, you can see that the Invo transfer windows are customizable to any game. Now let's click on the IV icon in the top left corner to claim the gems from Raid. And I've already entered the pin, but you'll have to do this manually when transferring. And there you have it.
Okay, so that's our demo. Our process to actually do this is actually patent pending. Our patent is published right now. So if you go to the US Post Office website and you search, you'll actually see our patent there. It's made public. So we're patent pending at the moment, and we're super excited about this because we're using game engine technology and blockchain technology to actually facilitate for this trade. We do have a utility token that's actually pinning the value behind these in-game tokens, or gems, or whatever the case may be, so that we can actually match the transfer between the games. The traction that we have right now is we have traction, which is a ZKP provider. We use a lot of zero knowledge proofs in our system for off-chain to on-chain transactions. We've also partnered with Good Dog Studios, which is, the founder of Good Dog Studios is Chance Glasgow, the same gentleman who's a co-founder of Infinity Wars and Call of Duty. We've partnered with several other studios as well, including game engine companies like Meta Engine. We're currently in contact with Prime Games, Amazon Prime Games. They're not in our deck because that's relatively new. And they're looking to start the process of beginning to demo our system within the next 4 months. So we're working towards that. The market opportunity that we have before us is the game industry is $300 billion in revenue annually. There's over 59,000 studios that make up that revenue. And in 2022, there was over 10,000 games that were launched in one calendar year. What that means for us is in terms of our revenue projections, and by the way, we do have a pro forma, so if you're interested, we could share that with you, or the summary of our pro forma. But I wanted to break down the numbers so you can actually see what it'll take for us to make a $200 million revenue. If we're looking at 10% transfer, which is our gross, that 10% will be our gross revenue. If we're looking at the average monthly spend of a player is $97. If that player spends twice or transfer that amount twice, essentially is $19.40. Which is, 10, basically 10%, or that 3.5%. If we had 5.2 million players, our gamers, do that transferring in and transferring out, which represents 0.064% of the total market of gamers out there, would easily be able to make a $200 million revenue within a calendar year. And that's what we're looking at right now. We actually did a case study on a very well-known game called Anthem, and we took their numbers and we applied our projections to them. And Anthem, within the first 30 days of launching, they had 6 million gamers enter their game. If they were entering their game through the Invo system or utilizing the Invo system, Anthem would have made $8 million in revenue within the first 30 days. Keep in mind, Anthem was made for $90 million, and they spent I think $30 million in marketing, and they only made $100 million back after all of their sales. So our ability to actually monetize that negative player churn is what studios, small and big, are very excited about, because it's very unique the way we actually put our tech together. And obviously it can all be done because we're actually utilizing the blockchain and its facilities there. The roadmap in terms of where we are right now, where we plan to be, we finished our internal demo, which we just shared with you in Q3 2023. We're looking to start the auditing of our code and all of our smart contracts second quarter of this year, and third quarter of this year, we're looking to start closed beta with our clients onboarding, like Prime Games and the others that we've been signing up. And we look forward beyond that to start establishing our merchant account exit for players. And what that really means is, and I'm not going too deep into it, but because these gems are actual cash or representation of cash through our utility token within the games that the user is passing back and forth. We intend to actually have that user, or rather give them the ability to buy, pizza if they wanted to, or Uber Eats or a Lyft ride or whatever the case may be. So to fulfill that circle, that value circle that we're creating to them, so they can actually bring the digital to the real life, right? We call it digital to IRL. So that's our plan. Advisors, our advisory board, we're very proud of. We have David P. Clark. He's a former president of Take-Two Entertainment. He's also the gentleman that greenlit Grand Theft Auto. We have Chance Glasgow. I mentioned him earlier in the presentation. Chance is a co-founder of Infinity Wars and Call of Duty, and he just started his new studio, Good Dog Studios. He will be using our tech as well. We have our final advisor, John Youssef. Over 20 years in game development. He's worked on World of Warcraft, Fortnite, and he's also CEO of his own studio as well. So the ability to actually bigger studios, and that's what we've been doing through our advisors, not only to find product market fit, but also to actually get them on board as customers as well. The team behind Invo is, of course, myself. I'm the founder and CEO. I have over 20 years of experience in software engineering. I have founded several companies, and the last project I did in web space was an NFT project for Hulu and Peacock. Jonathan Cooper is my CFO. He has 30 years in the financial services industry. He was also the former CEO of HSBC Grand Cayman and also former head of risk management at PwC. My CTO is Dylan Kowalik. He's a former the technology evangelist of B&B Chain and founder of Bridge Builders DAO, and one of the lead researchers at Harmony and Findora. And the opportunity that we're looking to offer is we're raising Series A at $6 million. We have a $60 million pre-money valuation. As you can see, we have a pro forma already. This is just a screenshot of a summary of our pro forma. So if you're interested, we can actually give you access to our data room, and you can actually go ahead and review all of our numbers and our projections and where we're intending to use the funds to actually do what we need to do. And that's it for the presentation. I look forward to answering any questions you might have. And I thank you for your time and in inviting me to actually present. This is super cool.
I'm gonna be blunt, like straight out, that your ask is unreal. So like you're asking for 6.7 million. You haven't gone to market. Your product has no technical throughput all the way through. You have a ton, like you're in a seed stage element right now. You need to get LOIs and stuff. Like your demo that you did for Angry Birds and stuff, there's no way that was a real demo. That was a mock-up. There's no way that was fully integrated and all the way through, not with everything else that you just said.
So are you asking a question, or are you making statements?
I'm looking for you to trying to be helpful, but I'm also trying to get and see what else you have there.
Let me turn your statements into answers then, okay? The last one, which is there's no way that demo was actual demo and it was actually just put together. You're correct. It's actually put together. That what you see, and we can do internally with any game we have access to, as long as we integrate our SDK into, which takes us 10 minutes to do. Your other question is in terms of our valuation. I stand behind our valuation at $60 million. You might disagree, and it's fine. If you want to have a conversation, that we can. Do you have any other questions though? Like I'm trying to answer them as I can.
We're in investment crunch. Like you have to have like some ROI return here, and you're not showing. Like I don't see the multiples here. Like how are you going to return a fund at $6 million? I gotta make sure that I want at least 10x my investment. If I think that it's going to take you at least 5 to 10 years to potentially exit, that's nowhere near. And you haven't even showed that you have the capability from a traction standpoint for what you're asking for. That's why investors look at different stages ahead of time.
We have LOIs from studios already that's already signed LOIs willing to use our software to actually allow their players to move between games. Like I said before, when I showed the page right after.
Yeah, that's a pre-seed and seed stage. Series A requires you actually have traction, not just LOIs. And you're asking for them.
Okay. Well, I mean, what do you want me to say? That's our pre-money valuation, and that's where we're at. If you disagree with it, it's okay.
Best of luck.
Hey, can I ask a question?
Yeah, sure. Go ahead.
Hi. So first of all, I really like the presentation as a fellow startup, but I'm also an angel investor in my other hats and before. Do you have any unique IP or patented IP that you also have as an asset in the business? Because I'm guessing that's probably part of the basis of your evaluation.
Yes, that is part of base of our evaluation. We have, as I said, patent pending right now. We're probably about 6 months away from getting the final decision, whether our patent is going to be issued or how many of our 20 claims we're actually going to be getting. But yes, you're correct. Our patent is weighted towards our pre-money evaluation as well.
What if you don't mind me asking, what's your patent focused in?
Our patent is focused on the method of transferring value from one game to a next using blockchain technology and video game technology, or game engine tech.
Okay, and one more question, if I may, if I'm not hogging anyone's else's question. How do you financially reconcile the revenue between the companies doing that? Because obviously you have the expertise in-house, but I would wonder, because does it register as a sale between game A to game B? How do you manage that?
Between game A to game B, it's not registered as a sale in our system. It's more like a swap or a swap fee, because all those are actually API calls to our decentralized exchange. So it's basically a swap fee that we're charging the player as they're going from one game to the next. The sale happens if that gamer uses those currencies in game, those gems, if they use it to buy a skin, that's actually considered a sale.
I'm asking because the gamer buying those points or tools or whatever they buy in the game at that time registers as revenue for that gaming company. So if they suddenly don't have that revenue anymore and it goes to someone else, they need to reconcile it financially in-house as well.
Correct. When the gamer moves their balance from one game to the next, it's not registered as revenue for the game studio. It's actually only registered as revenue for the game studio when the player actually when they actually make a purchase, or on that transfer, that fee that we pay. Those are profit centers for the game studio.
Okay, thank you so much.
Thanks, Delroy, for your amazing pitch. It was a pleasure seeing you here, finally making it here on the call. And as I promised, guys, before you go, let me just share the links to Palo Alto Lab, as you can fill out and receive the latest information about upcoming events and collective calls. So all attention to the chat. We have Palo Alto invitation form you can fill out, and you have also the link to Palo Alto channels. You can subscribe and receive the latest news. It was a pleasure to having you here, helping me here with the call. Thanks all the participants here and our two projects for their pitch decks. It was a pleasure. Thanks for joining, and I think we can see you next week, right?
Totally.
Thanks.
Thank you, everyone. Thank you so much for coming.